Hi everyone, welcome back to your weekly market outlook. This is for the 7th of October 2024, obviously the first full week of trading in October. And I definitely want to talk about last week's number, and we'll just skip straight into the NFP numbers. This is a huge surprise. The previous month was revised up to 159,000. Market was expecting 147,000 gains. We got 254,000. That is a huge surprise to the upside. Pre-revision, obviously, we're looking at about 110,000 gain. Massive gains in terms of the NFP numbers there. The unemployment rate has also fallen from 4.2% to 4.1%. Now, this is very interesting as if we also take a look at the average hourly earnings there. Previously it was revised up from 0.4% to 0.5%, and the average hourly earnings is now at 0.4%. Does it mean a lot in terms of how the inflation number is going to play out this week? Probably not, but the number was just a huge smash hit there. I don't think anyone in the market was expecting a number that was that high coming up from the NFP numbers, 254,000. That is just crazy. That's above 300,000. That's above 110,000 above the previous number. Massive gain in terms of the labor data there. Looking really healthy, and what the Fed has done with the jumbo cut of 50 basis points cut. Obviously, this is not representative of that cut, but definitely puts the NFP, the FOMC ahead of the curve as it is right now. Improving labor market, really strong labor market. Softer inflation number, and with the FOMC starting to cut interest rates right now. I think there's a little bit of a shift in terms of market expectation as well. With previously, before the NFP number was released, there was some percentage of market participants looking for that extra 50 basis points coming in 7th of November there. At this point in time, at this rate, looking at the current numbers there, it is nigh impossible that we're going to be getting a 50 basis points cut. So 25 basis points scheduled by the FOMC for November, another 25 scheduled for December. I think this is pretty much set in stone for the rest of the year there. So with the market pricing in here and there, I don't think we're going to be looking at that current situation there. This is a stable improvement for the US dollar, and definitely something to think about in terms of how the US dollar has been gaining in the past week as well. All right, this week, obviously the Australian market is closed for Labor Day there. Chinese market is also still closed. Tuesday, nothing major there. On Wednesday, the RBNZ. Now, I think a lot of surveys that was done by the banks in New Zealand right now, I think 11 out of 20, it's expecting a 50 basis points cut from the RBNZ, citing that it is imperative for the RBNZ to start cutting quite aggressively. Otherwise, the market is not able to breathe. The economy, it's really hard for the economy to breathe there. So on Wednesday, I think market is starting to price in for a 50 basis points cut coming up from the RBNZ. Obviously, this is going to put a lot of pressure on New Zealand dollar as well. So just keep that in mind, because with the FOMC pretty much set in stone with the 25 cuts. For this year, the RBNZ is currently priced in for a 50 basis points cut there. FOMC meeting minutes there, obviously is going to provide us with some information there, but I'm not really looking at anything of surprise there. I think the language that's going to be used by the FOMC is that, hey, they need to be a little bit more on the careful side. 50 basis points jumbo cut for the first one. The rest, they're going to go with a 25 cuts. Now, inflation numbers, in headline inflation expected to go down from 2.5% to 2.3%. Core CPI monthly gain is going to drop down from 0.3 to 0.2. Monthly gain for inflation there is also expected to kind of drop down from 0.2 to 0.1%. That's going to be the main focus there. It does indicate that FOMC has the right to cut interest rate, and whatever they're doing right now doesn't pose a risk for inflation to jump up at this point in time. UK GDP numbers also coming out on Friday there. The US PPI also expecting a softer PPI numbers coming out from the US economy. This is all for this week. Again, focus is going to be on the inflation number there, whether or not it is a confirmation for a recovery in the US dollar. All right, let's move on to the technicals. Aussie USD here, pretty much being well supported at 68 cents. This is something I will also mention previously last week. I think out of all the currencies out there, the Australian dollar is pretty much a stable currency, 68 cents. Providing a good support for the Aussie USD here. Might see a little bit of a recovery here once price is able to push back up above 68.25. On the flip side, should it drop below 67.75, that could actually open up a much deeper pullback towards 67 cents. Again, there might be a support trend line there right around 67.50. Support one is located there on the weekly pivot. We also have a rising trend line that's likely going to provide a stronger support there, regardless of the expectations for the Aussie USD here. 67 cents, definitely a strong support. We are still looking at the Aussie USD being in an uptrend there. A lot to go for the Aussie here. Obviously the RBA, not that dovish at all, and also the stimulus package was released from PBOC there. That's going to help demand for the Aussie dollar here as well. So a very different situation compared to the New Zealand USD. RBA and Z expected to cut a lot more. RBA not expected to cut at all. In fact, I think in terms of the probability for a cut in December has shrunk down significantly there. So Aussie USD, very stable currency at this point in time. Euro USD, this one here, I think we lost 1.10, still well supported 1.0950. What's interesting here is the 127.2% extension here for the euro. It is pretty much at about 1.0950, and also where the Ichimoku cloud is located. So 127.2% extension, Ichimoku cloud, that's where the base is located. Obviously with the pivots there, huge gaps in the weekly pivot as well as the support. So support one is located at 1.088. That's pretty much about 1.09. If price is pushing lower below 1.0950, that would take it below the Ichimoku cloud. Opens up a huge risk for the euro to actually fall down even further. But yeah, regardless, we're currently looking, even if there's that downward pressure on the Euro USD, I think 1.09, 1.0880 where the support one is located could provide a temporary support for the Euro USD. But any bounces off 1.0950, we expect a retest of 1.10. If a retest of 1.10 happen, then we might as well anticipate a return towards the weekly pivot here. That's going to put us back close to 1.1050 on the Euro USD. So changes in structure, obviously we have confirmed a double top here, 1.12. We have broken below 1.10. So whether or not we might see a recovery on the Euro USD, that's going to be really tough at this point in time, because any push up to the weekly pivot there at 1.1050 could actually be met by sellers around those levels. But regardless, with the situation here, we don't have a confirmation of a trend reversal. This is currently price is currently trading within the Ichimoku cloud here. So yeah, pretty much on the fence here for the Euro USD. Pound USD, we have corrected lower. In fact, we have pushed down to 1.31. We didn't have a weekly close at 1.31. In fact, it actually finds support at 1.31 there. That's where 78.6% is located as well. So no changes in terms of the market structure for the pound USD, maintaining the uptrend here. We haven't created a lower low here. The market has continued to create a higher high here on the pound USD. So anticipate a little bit of a potential bounce where the 78.6 is, which is at about 1.31. Price can push down lower towards 1.3. Any bounces off 1.3 would actually create a double bottom on the pound USD. So we're still looking at a little bit more positivity, at least on the pound USD, comparing it to the Euro USD. I think the pound USD is still a stronger currency. Obviously, the sell-off on the pound USD last week was more on the dovish comments coming out from the Governor Bailey there from Bank of England. They might actually be thinking of a little bit more on the aggressive cut. That's basically what's putting pressure on the pound USD. But from a technical perspective, this is an overextended correction, but nevertheless still considered a technical correction, not a reversal for the pound USD. So definitely a key level to watch out for this week is 1.31 and 1.32, where the weekly pivot is located. Any break above 1.32, that's going to push the sterling up higher. but definitely really keeping a close eye out around 1.31. Any bounces off 1.31, if we see enough volume here, if we see enough buyers coming into the market, that could actually be the immediate support for the pound USD, and that's basically going to be the short-term floor on the pound USD. Push low towards 1.3, that would turn that into a double bottom again, regardless of what where the bounces happen. 1.31, that's going to give us a much stronger recovery on the sterling there, but any bounces of 1.3 would also still be considered a strong support there, especially bouncing off from a key psychological price level on the pound USD. All right, this is the dollar yen. A couple of things to talk about on the dollar yen. Obviously, the good labor market there in the US, that's number one. Number two, we have the new government in Japan right now citing that this is probably not a good time for a continuous rate hike. Bank of Japan is also looking at this and say, you know what, we have time to think about what's really going on. I think what's capping the market today, it's concern from Ministry of Finance today. You know, they were citing, hey, the Japanese yen is really volatile right now. We might actually have to intervene again. No confirmation as of yet, but definitely want to be keeping an eye out on the lead here. August high 149.40, that's still capping the market. And also consider this, prices within a very, very thick Ichimoku cloud. Short-term push beyond 152, that would confirm a trend reversal. But right now, definitely looking at 149.40, 149.50, that could actually act as an immediate resistance there. I know if we take a look at a weekly pivot there, the nearest resistance one is actually going to be at 151.25. That's still about 175 pips from the current price level there. Again, I don't think we are going to break above 149.50 at this point in time. Any rejection at 149.50 could actually see price being pushed back to 147, 146.50. You definitely want to keep an eye out on 146.50 to 147. Any strong bounces off 146.50, 147, that could be the trigger for a lot of traders here waiting to position themselves into the dollar Japanese. And I know we have seen that rally there, but you know, a lot of the funds here have not put their money back into a long dollar Japanese yen. Definitely keeping an eye out if whether 147 and 146.50 could actually hold the market. Do keep in mind this is where market was previously struggling, so we anticipate this level to be tested as support. Once this level is tested as support and we see demand coming in for the dollar Japanese around this key level, then the next move for the dollar Japanese is not really that hard to look at, because once price bounces off 146.50, 147, that would be the confirmation where a lot more traders, a lot more funds are going to come in, and they're actually going to reverse the whole yen strength here. They're going to start buying the dollar Japanese yen, and that move for this month in October, if we see that, that could be the defining moment where we could actually see the dollar Japanese yen pushes back up above 150. So position traders, swing traders, get ready for this month. Sustain close above 146, 147. Price doesn't dip down below 146. That would be a lot. That would be the key confirmation a lot of traders are going to be looking out for. So dollar Japanese is something to keep an eye out, especially in the month of October. All right, so with that, good luck with your trades for this week, and I will see you soon.